When you picture a billionaire who owns a private island and a super yacht, who do you see? You probably imagine a guy in a sharp Italian suit, shouting into a cell phone, making big deals on Wall Street. You probably imagine someone who loves the spotlight. But the man who made more money than almost anyone else in history wasn't like that at all. He didn't like suits, he preferred comfortable shoes and old sweaters. He didn't scream on the trading floor, he sat quietly in a room with a chalkboard. He wasn't a banker, he was a math teacher. His name was Jim Simons, and before he became the king of quants, he was just a guy who really loved puzzles. To understand how Jim Simons cracked the code of the stock market, we have to go back to the beginning. Before he cared about money, Jim cared about shapes and numbers. In the world of mathematics, he was a superstar. He was so good that he won the biggest prizes in geometry. He discovered things about shapes that are still used by physicists today to understand string theory and black holes. But Jim had a restless mind. In the middle of the Cold War, a time when the United States and the Soviet Union were spying on each other, Jim took a job as a codebreaker. His job was to look at messy, scrambled signals and find the hidden message inside. To a normal person, it just looked like noise. But Jim knew that if you stared at the data long enough, and if you used the right math, a pattern would appear. He learned that the world isn't as random as it looks. There is always a hidden order, if you are smart enough to find it. And that's why you should subscribe to Fleece, to uncover stories like this every week. Eventually, Jim got tired of breaking codes for the government. He went back to teaching at a university. He had a safe job, a nice office, and a great reputation, but he was bored. He looked at the stock market and saw the ultimate puzzle. Back in the late 1970s, investing was done by gut feeling. Traders would read the newspaper, talk to their buddies, and make a guess. They would say things like, "I think people will buy more cars this year," or "I feel like gold is going up." Jim thought this was silly. He didn't care about feelings. He didn't care about the news. He looked at the squiggly lines on the stock charts, the prices going up and down, and he saw the same thing he saw during the Cold War. He saw a code waiting to be broken. He wondered, what if stock prices aren't random? What if they move in patterns that are too complex for a human brain to see, but perfect for a computer to find? This was a radical idea. At the time, most economists believed in something called the efficient market hypothesis. That's a fancy way of saying that it's impossible to beat the market because the price is always right. They said trying to predict the stock market with math was like trying to predict a coin flip. They said it couldn't be done. Jim Simons didn't agree. He quit his safe job as a professor. He left behind his classroom and his chalkboard to start a company in a strip mall on Long Island. It wasn't fancy, it was next to a pizza place and a boutique. He didn't hire the usual Wall Street types. He didn't want guys with MBAs or business degrees. He started looking for people like him, scientists, astronomers, and codebreakers. He gave them a simple but impossible task. Don't read the news. Don't worry about which company is making a cool new product. Just look at the numbers. Look at the price of wheat, the price of bonds, and the price of gold from the last 50 years. They were looking for ghosts in the data, tiny little patterns that repeated themselves over and over again. Maybe every time it rained in Brazil, the price of coffee in New York went up by 1 cent. A human trader would never notice that. But Jim believed that if he could find enough of these tiny patterns, he could build a machine that printed money. But it wasn't easy. In the beginning, nothing worked. The computers were slow, the data was full of errors, and the system kept losing money. Jim was stressed. He had given up a brilliant career for a gamble that looked like it was failing. Most people would have quit and gone back to teaching, but Jim stared at the chaotic numbers and kept working. He knew the pattern was there. He just needed a better magnifying glass to see it. If you walked into a normal investment bank in the 1980s, you would hear shouting. You would see phones ringing off the hook and people running around with stacks of paper. It was loud, chaotic, and full of energy. But if you walked into Jim Simons' office, you would hear something very different. You would hear the hum of large air conditioners cooling down giant computers. You would see people sitting quietly drinking coffee and staring at screens. Jim had made a decision that confused everyone. He decided that he didn't want to hire anyone who knew about business. If you had an MBA or had worked on Wall Street, Jim didn't want you. He thought Wall Street people already had bad habits. They told stories instead of looking at the truth. So who did he hire? He hired astronomers. He hired physicists. He hired people who spent their lives looking at stars or studying atoms. You might wonder, what does a star have to do with the stock market? Well, think about what an astronomer does. They look through a telescope at a tiny dim light millions of miles away. The atmosphere makes the light blurry and shaky. They have to use math to filter out the blur, the noise, to see the star clearly. Jim realized the stock market was exactly the same. The prices of stocks are always jumping around. That's the noise. But hidden inside that noise is the true signal, the real direction the price is going. If an astronomer could find a star through the fog, they could find a profit in the stock market. But these scientists had a big problem. To teach a computer how to predict the future, you have to feed it the past. The computer needs to know what happened yesterday, last year, and 50 years ago to learn the patterns. Today you can download that information in 2 seconds. But in the 1980s, the internet didn't exist like it does now. The data wasn't on computers, it was on paper. It was in dusty old books stacked in libraries. It was on microfilm reels. Jim's team became data hunters. They went to the Federal Reserve and dug through archives. They found records of commodity prices, like how much corn cost in the 1800s. They found closing prices from the London Gold Exchange going back nearly a century. They brought all this paper back to the office, and they had to type it into the computers by hand. It was boring, exhausting work. But it was their secret weapon. While other traders were only looking at what happened last week, Jim's computer knew what happened 50 years ago. They had a map of history that no one else had. However, having the data and the scientists wasn't enough. The early days were actually a disaster. Jim started a fund called Limroy. At first they didn't trust the computer completely. They would let the computer make a suggestion, but then a human would decide if it was a good idea. It was a mix of man and machine, and it didn't work very well. The market went crazy, and Jim started losing millions of dollars. He was so stressed out that he would sometimes lie down on the floor of his office to think. He got stomach pains. It looked like his big experiment was going to fail. The scientists were arguing. Some wanted to trade based on the news, others wanted to follow the math. It was a mess. This was the turning point. Jim realized that humans were the problem. Humans get scared when they lose money. Humans get greedy when they make money. Fear and greed make you make bad choices. Jim decided they had to take the human hands off the steering wheel. They needed to build a system where the computer did everything. No second guessing, no gut feelings. If the computer said buy, they bought. If it said sell, they sold. They began building a new system. They called it the Medallion Fund. It was a black box. You put data in one side and hopefully money came out the other. They were trying to build a machine that could think faster and smarter than any human being on Earth. They were about to turn finance into a pure science experiment, but nobody knew if the lab was about to explode. When Jim Simons and his team finally turned on the new version of the Medallion Fund, they stopped trying to be smarter than the market. Instead, they decided to be faster. To understand what they built, we have to unlearn everything we know about investing. Usually when you buy a stock, it's because you like the company. You think, I like this sneaker company, everyone is wearing their shoes, I think they will make a lot of money in the next 5 years. That is how normal people invest. That is how Warren Buffett invests. But Jim's computer didn't care about sneakers. It didn't care about cars or phones or oil. It didn't even know what those things were. To the computer, a company was just a ticker symbol like AAPL or FORD and a stream of numbers. The computer was looking for relationships. Imagine you have a dog on a leash. If you walk to the left, the dog usually walks to the left. If you stop, the dog eventually stops. The dog and the human move together. The computer found stocks that acted like the dog and the human. Maybe it noticed that for the last 10 years, every time the price of oil went up, the price of airline tickets went up 2 days later. It didn't matter why this happened. Maybe it was logical, or maybe it was just a weird coincidence. The computer simply saw that it happened 55% of the time. And that number, 55%, is the secret key to Jim Simons' fortune. You see, in a casino, the house always wins. But the casino doesn't win every single hand of blackjack. They lose all the time. But they know that the math is set up so they win slightly more often than they lose. If they play 1,000,000 hands, they will end up with all the money. Jim turned his hedge fund into a casino. He wasn't trying to make one big lucky bet that would double his money. He was making thousands and thousands of tiny bets every single day. If the computer saw a pattern that had a 51% chance of working, it would make the trade. It might buy a stock at 10 a.m. and sell it at 10:30 a.m. They were picking up pennies, but they were doing it so many times that the pennies turned into billions of dollars. They called the system the black box. It was called a black box because you couldn't see inside it. Even the scientists who wrote the code couldn't always explain why the computer was doing what it was doing. One day, the computer might start selling all the gold it owned. A trader might look at the screen and say, "Why is it doing that? The news says gold is strong." But they had learned their lesson. They didn't touch the buttons. They let the box do its work. And usually by the end of the day, the price of gold would drop, and the computer would have made a profit. The computer was finding patterns that were too weird for humans to believe. Some people say the algorithm found patterns based on the weather in Paris or the phases of the moon. It sounds crazy, but if the data showed a connection, the computer traded on it. This was the birth of quantitative investing, or quants. Before this, finance was a boys' club where people shouted and used their intuition. Jim Simons replaced the intuition with cold, hard algebra, but there was a catch. These patterns were like ghosts. They would appear for a moment and then vanish. If you waited too long, the opportunity was gone. This meant the team had to have the best technology in the world. They were constantly upgrading their computers, making them faster and faster. It was an arms race. If another hedge fund figured out the same pattern, the profit would disappear. It was a secret war fought with code. Jim Simons was so paranoid about his secrets getting out that the employees signed strict contracts. The company was located in a quiet town called Setauket, far away from the gossip of Wall Street. It was like a fortress. Inside that fortress, the black box was humming, and it was working better than anyone could have imagined. In 1990, the fund made a 55% profit. The next year, it made 39%, then 34%. These numbers were unheard of. Jim Simons had done the impossible. He had solved the market. But with all that money came a new problem. The machine was making so much cash that it was becoming too big to manage. They were about to face a challenge that no investor had ever faced before. They had too much money. By the mid-1990s, the black box at Renaissance Technologies wasn't just working, it was practically printing money. The Medallion Fund was performing so well that it broke every record in the history of finance. Usually, a really good investor like a rockstar investor might make 20% profit in a year. The Medallion Fund was making 60% or even 70% profit in a single year. Imagine putting $1 in a machine and getting almost $2 back over and over again. It sounds like a dream come true, but strange as it sounds, having this much money became a huge problem. Think of the stock market like a swimming pool. If you are a small fish, you can swim around without disturbing the water. But if you are a giant whale and you jump in, water splashes everywhere. Everyone knows you are there. Jim Simons and his team had become a whale. They had billions of dollars to invest. When they tried to buy a stock, they bought so much of it that the price would go up before they were even finished buying it. They were ruining their own trades just by being too big. So Jim made a decision that shocked Wall Street. Usually hedge funds want as much money as possible. They beg rich people to give them money. Jim did the opposite. He told his investors, "Here is your money back, we don't want it anymore." He kicked out all the outside investors. From that point on, the only people allowed to put money into the Medallion Fund were Jim Simons and his employees. It became a secret, members-only club. This changed the atmosphere of the company completely. It wasn't just a job anymore. Everyone who worked there, the janitor, the secretary, the scientists, had their own life savings in the fund. If the computer won, they all won. If the computer lost, they all lost. This created a very strange culture. Renaissance Technologies didn't look like a high-powered bank. There were no suits and ties. There were no fancy marble lobbies. It looked more like a university library. People walked around in t-shirts and flip-flops. Jim Simons, the billionaire boss, was known for chain-smoking cigarettes in his office and wearing old, comfortable clothes. You might see a world-famous physicist arguing with an astronomer about a line of code while eating a sandwich. They were the Avengers of math, and they were getting incredibly rich. Because the fund was closed to the public, nobody really knew what was going on inside. It became a mystery. Wall Street traders would look at the numbers and shake their heads. They called it the ghost ship. They knew it was out there taking their money, but they couldn't see who was steering it. The success was mind-blowing. Between 1988 and 2018, the Medallion Fund made over $100 billion in profit. To give you an idea of how crazy that is more money than the economies of some small countries. It performed better than Warren Buffett. It performed better than George Soros. It is mathematically the greatest money-making machine ever built by humans. But despite all this wealth, Jim Simons stayed quiet. He didn't go on TV. He didn't write books bragging about his secrets. He knew that if he told people how the magic trick worked, the magic would stop working. So the employees signed strict contracts. They were sworn to secrecy. If you worked at Renaissance, you didn't talk about work at parties. You didn't tell your friends what you were doing. You kept your mouth shut, and you watched your bank account grow. For years, this machine ran silently in the background of the financial world. It proved that math was more powerful than intuition. It proved that data was more valuable than gold. But eventually, Jim Simons got old. He had conquered the market. He had more money than he could ever spend in 10 lifetimes. He started to think about what comes next. What do you do when you have solved the hardest puzzle in the world? You start looking for new puzzles, and you start giving the money away. In 2010, Jim Simons did something that is very hard for successful people to do. He stopped. He stepped down from running Renaissance Technologies and handed the keys to the black box to the next generation of scientists. He was over 70 years old. He had proven his point. He had taken a messy, chaotic world and found the order hidden inside it. But now, he had a new mission. He had spent half his life making money. He wanted to spend the rest of his life giving it away. But Jim Simons was different from other billionaires. He didn't just write a check to a charity to look good. He approached giving money away the same way he approached the stock market. He looked for the hardest problems he could find. He went back to his first love, mathematics. Jim remembered being a math teacher. He knew that in many schools math teachers weren't paid very well, and many students thought math was boring. This bothered him. He knew that math was the language of the universe. Without math, we wouldn't have computers, spaceships, or the medicine that keeps us healthy. So he created Math for America. He spent millions of dollars to pay math teachers extra money, treating them like the VIPs they really are. He wanted to make sure the next Einstein or the next Jim Simons had a great teacher to inspire them. He also poured money into science. He funded research into autism, a condition that affects how people communicate. He funded research on the origins of life and the structure of the universe. He was basically paying scientists to sit in a room and think about giant puzzles, just like he used to do. While Jim was busy trying to save the world with science, the world of finance had changed forever because of him. If you look at the stock market today, it looks nothing like it did when Jim started. Today, human traders are becoming rare. Most of the trading is done by algorithms. High-speed computers battle each other for fractions of a penny, moving faster than the blink of an eye. Jim Simons started a revolution. He showed the world that you don't need a gut feeling to be successful. You need data, you need evidence, you need the truth. Today, quantitative investing is everywhere. It is used to price your car insurance. It is used by baseball teams to pick players, like in the movie Moneyball. It is used by companies like Amazon to guess what you want to buy before you even know you want it. We are living in the world that Jim Simons helped build. Jim Simons passed away in 2024 at the age of 86. He left behind a fortune, but more importantly, he left behind a lesson. He taught us that the world is full of noise. There is noise in the news, noise in politics, and noise in the markets. It can feel overwhelming and random, but Jim showed us that if you look closely enough, and if you use the right tools, you can find the signal in the noise. He showed us that being a nerd, someone who loves numbers and puzzles, is a superpower. He didn't become the most successful investor in history by trying to be a tough guy on Wall Street. He did it by being a curious mathematician who just wanted to solve a riddle. In the end, Jim Simons proved that the most valuable asset in the world isn't gold, and it isn't oil. The most valuable thing in the world is a good idea, and for the man who cracked the code, the puzzle was finally solved.